Sandip Sabharwal, good morning.
Morning.
I thought you'll have some warmth in your voice. You're hearing my voice after a week. Just a dull morning.
Yes, how's your health doing?
Yep. Just
Exercising too much. You're
yes, yes,
exercising too much.
yes. Need to understand that I'm also getting old. Wrong side of 40. Go easy on weights. That's what everybody says. How's the health of the market looking? We've been in a good. You've been in a good, groove, so to speak. In the month of May, sell and go away. Will it work this year, or that may not work this year?
Actually, usually, Nikunj, if you see, I think that's a wrong adage because June to September, normally markets tend to actually do well. So markets have done reasonably well as we've been expecting, driven by positive macro factors, which include easing liquidity cycle, reducing interest rates, impact of higher government spending, income tax breaks. So I think there are a lot of things working for India right now. Now, on the threat side and on the global macro side also, after I think the worst of the tariff wars seem to be there. Now, from here on, it will only improve, not deteriorate. That's my view at least. Now, on the other hand, we have this geopolitical issue near term because of the Pahalgam attacks and what it'll lead to, which we have no idea about. So I think that's something we need to watch out for. Normally, uh, conflicts have not impacted markets to any great extent historically. Even the 26/11 attacks or Kargil, etc., did not have a significant impact on the market. So uh, hopefully that does not derail the entire process. X of that, I think markets are reasonably well placed.
So, Sandeep, where are bargains in this market? I mean, 6 months ago it was banks, 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 and banks and banks. Are banks now looking overbought? Are banks now the place where you should be booking profits rather than carrying the gains?
Technically, there's no reason to book profit simply because of the fact they will do well and they'll continue to improve performance. So in that context, you don't need to sell. But if you have not bought earlier, then you should be buying it in moderate quantities and percentages right now rather than very aggressively, which should have been the strategy a few months back. Now, what we should ideally see is that the impact of easing monetary policy, increased government spending, the sectors that benefit that of because of that should start seeing some traction, which could be uh, infrastructure companies, capital good companies, maybe some utility companies, or the consumer durable companies. So now most of the consumer durable companies who have been coming out with results, the managements are not sounding as bullish. But the point is that when they have not done well, typically the managements will not sound bullish. So, but the markets tend to take everyone by surprise, like the slowdown took them by surprise. So, my guess is that the improvements will also potentially take them by surprise. So, I think those are the sectors which could outperform.
Just looking at Reliance. And Chandan, I get a feeling that Reliance ka samay aa gaya. It's underperformed. Nobody likes it. Numbers are not that bad. Sandip Sarwal, for a change, has been liking Reliance for almost 6 months now. Chandan, Reliance ka samay aa gaya. Can I say that?
Good morning. Thanks for having me. बिल्कुल आपकी बात से सहमत हूँ, and it seems that the Reliance is now all set to give the fresh breakout. If I look at the price behavior of last almost 25 weeks, every time it took hurdle near 1300 to 1325. We have noticed that sustained call writing was visible at 1300 strike, but at this new series, we started to witness call unwinding, which is an early sign that Reliance can hold beyond 1300 marks. So I believe a small follow-up can trigger the short covering move led by consolidation breakout in technical terms, and which can take it towards 1385 to 1400 zone, which is 5 to 6% from current level. So price setup indicates some recovery, and I believe now Reliance will take the chart with support of 1275. It has potential to spike towards 1385 to 1400 zone, and if market has to hold above 24,000 or head towards 24,444, Reliance will contribute in a big way now.
Okay, I'm just going to again move focus back, and then let's specifically talk about IT, IT, IT. 6% up for the IT index last week. Sandeep, they say that you should buy the rumor and sell the news. In case of IT, everybody went short on the rumor and they bought the news. Has IT bottomed out, Sandeep? Because the bad news is out in the open. Whatever incremental changes now will happen for IT, Sandeep, are going to be positive.
There are two, three things we need to consider. While there is a case that the worst could be over, there is no case for any significant upside, given the fact that the macroeconomic impact of slowdown is still to be felt. Like the tariff impact on the US economy and other global economies will be felt from, I think, now on or a couple of months from now on, not in the past. The good part is that the guidance given by many of the managements are not very negative. Their order bookings are still okay. But when we talk to a lot of veterans in the IT industry, etc., what they also indicate is that many of these Indian IT companies are underestimating the impact of AI on their overall business. So I think there are too many moving parts. There has been a bounce back from extreme depressed levels. So I think the stocks corrected, many stocks corrected 20 to 40%. And there's a bounce back from there. But I'll be very surprised that if we have a sustained upside in the IT stocks.
Right, so that's about the IT space. Will be in focus in today's trading session. You have that big announcement coming in from Mahindra & Mahindra as well, where they are actually acquiring the stake in SML Isuzu. Sandeep, I wanted your view actually on Mahindra & Mahindra, the fact that they're expanding their portfolio as well with this sort of an acquisition, and a very marquee one at that. What's your take on Mahindra & Mahindra?
Yeah, Mandam has been doing well across its various businesses, be it the utility vehicles where it's a leader, and also the tractor segment, which has started to grow last year and is expected to do well this year also. The acquisition also seems to be reasonably priced. So I think it will only add value to the company because the quarry SML Isuzu has a good brand image in the segments in which it operates. So I think this acquisition per se, I would think is a positive development.
You like Mahindra & Mahindra. You still own it? Sandeep?
Yes, yes.
See, I remember, my friend. So we spoke about 3 stock ideas from you, as in on the budget day. One was Bajaj Auto, then it was KEC, and I think the third one is Reliance, right? L&T, Bajaj Auto, and KEC.
Yeah, so all of them have done nothing till now.
Which is what I'm
So
asking this
I
question.
think,
Which is I'm asking this question. Kya ho raha hai?
so I think the two-wheeler industry has been grappling with some demand issues in the domestic side, but I think overall picture isn't bad. So I think it's still my view on the macro side. Like, and I keep on repeating that improved liquidity, reducing interest rates, higher disposable incomes, higher government spending, all of these are positive for consumer durables and as such positive for autos. So uh, the impact of that should be felt on demand, and these stocks have fallen. The auto stocks have fallen reasonably, especially two-wheelers and Bajaj Auto. So I think that's the reason I think it's reasonably valued. L&T started to do well, then there were concerns because of tariffs, etc., lower oil prices. There'll be some project cancellations, which historically does not seem to have too much of basis, and the company has not indicated that. So as the results come out, we'll have a better idea on that. And KEC, obviously, like other transmission companies, is a big beneficiary of Middle East investments, RE investments globally. So I think, and it's a cheap stock now. And it also benefits as interest rates go down because it has reasonable leverage. So I think all these 3 stocks I still think should do well over the next year.
The take on all the three majors, but other than that, within financials, a lot of stocks that will be in focus on the back of the earnings. Especially, we have the numbers coming in from Chola as well as Shriram Finance. The numbers don't look that exciting, but within the space, let's watch out for RBL Bank, because there a lot of brokerages have rather gone ahead and upgraded the stock, and not just that, have raised the target price as well. Firstly, onto the numbers, the NII has seen a slip of almost 2.3% on a YY basis. The NIMs were actually flat on a sequential basis, but the asset quality has seen an improvement. And look at the brokerages move. The IFL has raised their target price to 210 rupees now versus 155 earlier. There's a rating upgrade by Investec, and so is the case with Motilal Oswal. But Sandip, how do you read into RBL Bank given the underperformance and given all the concerns with respect to their asset quality and their book? Do you believe that the worst is behind for RBL Bank and maybe it's time to look for it?
Unfortunately, I haven't tracked the bank closely, but on a macro side, I can give a view that all the banks who are coming out with results seem to indicate that on the microfinance and unsecured side, the stress seems to have peaked. So if that is the hypothesis and that comes out to be true, then many of these banks, which include RBL Bank, should see much better days going forward. But specifically on the stock, I don't have a view.
Sandeep, the other sector I wanted to touch upon is the cement pack, because, well, of course, today the major Ultratech Cement will be coming out with its numbers. But what we have seen in the trend so far, the numbers don't look that bad. And what these brokerages are highlighting is that for the month of April, there's been yet again a price hike, and that seems to be sustaining. Do you believe that cement is the place to be?
So there are a couple of things on the cement side. One, obviously the companies who have come out with results have given a reasonably positive guidance. Margins have held up better than what was expected. And the cost cutting which these companies have been able to do due to either raw material optimization, waste heat recovery, or going into renewable energy is so strong that it's helped them cut costs even when prices of cement have not moved up at all over the last few years on a net basis. But the valuations are not cheap of the sector. So I think that's the only concern about this sector. Otherwise, I think in terms of outlook of improved earnings growth as well as volume growth, and this year on both these factors should be good.
All right, so that's the take coming in on some of the cement plays.
Sandeep, we have touched upon a lot of sectors, be it from cement to IT, and then we talked about Reliance. But help us understand that what is that you are looking at right now, because I remember last week you were saying that you might look to raise some cash again and you would like to start selling at this point in time in a gradual manner.
Yeah, so I think cash is more a tactical thing where you tend to get invested fully when markets are down and then generate some amount of cash when you think that markets have come up strongly in a short period of time to capture opportunities when the market corrects. That's the only reason. Otherwise, overall, I would think that the outlook for the markets is still reasonably strong. X of any geopolitical issues which happen and which could be more adverse than what we can predict at this stage.
So that's the take coming in on markets. Thank you so much, Sandeep, for joining us this morning, giving us a take on various sectors, especially Reliance, and also the top bets that you have in the current market.
If you like this video, then like, share and subscribe to ET Now.